Hey traders, Nick here looking at Dropbox. They just reported earnings after hours on the May 9th. So, okay, so the earnings were better than expected, but I think they've done that every time. And this, we're looking at a 1 year's chart. A fairly new issue. So the 1 year chart doesn't look that good. Year to date, it's in line, I think. Or thereabouts. So, but definitely the trend is lower. So if I go to a 5 year that just to show the weekly from inception, it doesn't look that good, right? Let's see if I can compare it quickly to Box. Box is better relative to where it came out of the box, but they both don't, say I love it. So let's look at the report. First of all, they did beat all the metrics. And it also showed that they actually are moving people up the ladder with regards to user revenue per user, average revenue per user, ARPU they call it, the acronym for it. So that means that they are doing the right stuff. The management is doing the right stuff with regards to either upselling people and on top of growing and their base, and also maybe migrating towards a business. And I think that is where they start crossing into Box. I think the major differentiator so far, at least as perception, is that one is more retail consumer, and the other one is more business. So maybe they're trying to blur the line and eat away at the Box. Okay, so they grew sales year over year. Now, valuation is not that great. First of all, they don't make money, so you can't say earnings from the traditional sense, price to earnings ratio. But I can compare sales. I would put them in the competition with Google because I use Gmail and all the free stuff that comes with Gmail, which includes a competitive alternative to Dropbox. I use Dropbox just because I was one of the original fools that actually, tried to recruit people for an extra half a gig of free space there. So I have enough free space from them, and the minute they say you have to pay for it, I'll say bye-bye. I'll use the free stuff from Google. So I would never pay Dropbox myself. But they do compete with Google, and if you compare the price to sales, they're about 40% more expensive than Google and even Box. So from that perspective, they're kind of expensive, but at this point in time, if they're delivering 20% growth year over year as far as top line, I can ignore the profitability, the valuation, so to speak, aspect of it. So I'll give them a pass from that standpoint, and I would trade it from the long term, but only in a rising market. So if you tell me that the S&P tomorrow is going to start a correction, I say I wouldn't take Dropbox because it'll probably, when investors are scared, they don't buy froth, or at least perceived froth. They go to the meat and potatoes, something that has value, something that pays a dividend. They don't go after high growth stocks because, it's uncertain times, right? So this is the stock, and after hours, it's moving. I believe it's popping, last I checked, about 5%, 4 to 5%. So it is moving higher, up a buck. So I'd say somewhere around here, which is pretty interesting. So let me see here. If I go to smaller increments than just daily, we're looking at a 240 minutes, so 4-hour bars. Okay, so let's mark it up here. I'll bring my trusty free snipping tool from Windows. All right, so we can decipher a few clues. First of all, that this level here, obviously recent fail, right? And it's not that crazy because this was a zone of failure. They were fast. If you take this box right here, it's smack dab in the middle. They were fast profits and big gap. So this whole zone and half of it is right there. Makes total sense for me. So it is a fail level. You say it's resistance. But here's the exciting part. It's spiking, right? So if it's somewhere around here now, it's likely to come and attack it again. So here's a scenario, short-term scenario. First of all, do I buy it? Maybe. It all depends on my perception and actually more of my time frame. So In fact, overnight we will get a massive headline about China, tariffs or not. What does that have to do with Dropbox? Well, the whole market will move up or down. So it's going to be a big catalyst either way. So if we wake up to a rising market because they kicked the can on the tariffs, this guy is going to move, attack this, and maybe break it. If not, it'll fail the first time a little bit and do this, and then it'll break it. And if that happens, then there's upside. How much upside? Well, this kind of looks like a rounding bottom or a cup and handle or whatever it is. The fact is they're attacking a neckline, and when they break the neckline, the bulls will overcome the bears and they overshoot to the upside. Technically, I believe it's about this much, actually this much to here. I usually look left and I say, okay, the first place they'll stop is where they failed next, which is somewhere around here. So if I'm long from here, this would be my exit point. If we wake up and the market is falling and all of the greens go away from Dropbox, then I will probably won't enter it until it falls back into the clutches of this, because that means that the market is falling out of bed completely, like 100 points S&P, and that means that most likely, and that means that Dropbox may be falling into here. I'm not saying like exactly 22, into the clutches of 22. It's a zone. So you see what I mean here? So I'm going to go away from this one and go back into that one and go back to the daily because I need more data. Okay, so we've marked up all of this, and I'm going to remark it on the daily. Okay, so this is a something doesn't look right here. Let me get the one thing I complain about this platform. It's great. Sometimes I can't reset it to give me a full year's worth of data. Well, that's it. Okay. All right. So this is 1 year's worth of data right here. Daily charts. Okay, so this is that same test that they're going to get to tomorrow morning if all goes as promised overnight. And this is the same cup and handle that we were just talking about. And this is the upside that we were talking about. And this is where I said I'd get out or trim or lock or whatever. So if I look left, look at this island reversal here, whatever they call it. All I call it is a failed breakout. Wow. That was emphatic, okay? And look where it took them. You know, they reported, they went to the moon, and then they decided, wait a minute, what the heck are we doing? So this was November. So how much of it was the problem from the whole market? You remember we were falling out of bed and we didn't bottom until Christmas? The good news is they had appetite to do a V. You know, several. So there are buyers. Anytime it hits support, there are buyers. And when support breaks a little bit, you know, the buyers are there. So, okay, so I said I would want to see the 22 where it falls into the clutches of this zone. Look left. That's why I zoom out. This is the zone I'm talking about. So we picked the right zone without even seeing back left. But now we have a lot more intelligence. So now we have a lot more conviction in our decisions. So this is the opportunity. $1, so 24.70. I'm going to eyeball it from here. 50 to 70, 24.50, 24.70. If they break above it, if they break this neckline, this would be they would stall first. All depends what the whole market is doing. Why? Because of this fail, and more importantly, this fail, and this being the ledge from which they fell apart from here to here. However, that percentage is pretty big. Okay, on a percentage basis. So the second line I would look at is the second exit point somewhere around here. So we're going to go this way, 28. So $2 increments would be the second zone of stall. Same excuse, different level. The third one would be up here. I mean, same reasoning. The third one would be here. So it all depends on how long I want to hold the stock or what. So these are the level above. Okay, so what about the levels below? The levels below are usually easier when you get down to the bottom here. So we'll go back to the fact that the Christmas low is obviously the bogey to shoot for. 19.8, let's call it 20 to round, is the second less likely scenario. This is a good enough test for now. 20.6, 21, let's call it 21. So unless the markets correct hard, I find it strange if we flip although it did flip that one red candle back there from being up 5% to going all the way back down to 21. So resting points would be the low from today, and then this candle right here, whatever that happened here on 22. So 23, 22, it's easier on numbers. 23, 22, 21, and then whatever happened before. 20 and a half, and then this mess right here. So these are the levels on Dropbox. Every investor is different, so I'm by no means endorsing Dropbox. In fact, I don't like it for myself. Fundamentally, I would trade it on the upside, but I wouldn't want to say, okay, I believe in it long term, I'm going to buy it and hold it. This would be something I personally would use options for, and go out in time maybe and buy a call option or a call spread, maybe sell some puts or put spreads and generate some cash in the meantime against some support. But I don't trust it enough to say this is my go-to. I'd rather put my money in, say, Google or Facebook or something that has fundamentals, or even Square that is also frothy but at least has fundamentals that I can bank on, that I believe in personally. This is my own personal opinion, nothing against the company. So we all want something in the cloud. There's plenty of business to go around. The trend is global. It's not likely to reverse. There are only a handful of companies that actually provide storage and all these services. So there's enough business for all of them. And if management continues to deliver 20% year on year, they'll eventually get to profitability and then beyond. All right, so Nick signing out.